Okay, on that note, my friend Tom Piotrowski is back, and it's good to see you this morning, Tom. So how are our markets looking?
Well, Pete, there's some welcome news to report this morning. The futures are saying that we'll be up by close to 1% when trade gets underway. So a contrast from that grim performance on Friday when we had the market down by 1.8%, visiting 6-month lows. So it's just a question of whether or not that rebound can sustain itself this morning. The only one of the challenges will be that we saw some weaker inflation numbers out of China at the weekend, which is not a good sign when it comes to aspects like commodity prices. So that's one thing to keep an eye on. We've also got quite a number of organisations going ex-dividend today. CSL, one of the larger ones. But the cues that we got from Wall Street on Friday were encouraging to the extent that sellers seemed to exhaust themselves on Friday. Over the course of the session, we saw the Dow recover from a 1% loss to be up by 0.5%. The S&P 500 at one stage was down by 1.25%. It finished with an improvement of 0.6%. So it was quite a volatile session. There was some encouraging words from Jerome Powell, who said that there's no rush to cut interest rates. The US economy is in a good place. We saw some slightly softer than expected employment figures on Friday. So that was a factor that saw initially US interest rates fall, but they rebounded to end a little bit higher under these circumstances. That's not such a bad thing to see those rates move up a little bit, because the levels that they have been at in recent weeks suggest that the markets are pricing in some pretty grim outcomes. So the Aussie dollar is trading just north of 63 US cents, so not vastly changed from where it has been in the last couple of days.
All righty, Tom. Speak to you in a few hours.